Encounter is brought to you by the Broome County Council of Churches, where we connect compassion with needs as we inspire growth with dignity. You'll find us in special places throughout the community. For those who remain hungry, we provide meals. For those who are challenged, we build wheelchair ramps. We comfort those who are ill, minister to those who are confined, and we remain an advocate for change and understanding on behalf of every element of our community. Connect and inspire. Encounter the Broome County Council of Churches.
Good morning and welcome to Encounter. I'm your host, Dave Alexander. Today's topic is going to be charitable giving. My guest, or one of my guests, is Carol Gallagher. She's an investment advisory representative from MetLife, and I will let her introduce her partner.
Okay. My partner is Ken Walcyk. He's from the Syracuse area, and he has been doing a lot of work in this area of charitable giving and financial planning. And we've been working together for about a year now, so it's a very good thing that we've got going here, helping a lot of people. Okay. We try.
Okay, before we kind of get into the whole topic, I'd like to have both of you tell us a little bit about yourselves. And I know when you gave me the list, you have all these initials in front of your, or after your name. Maybe you can explain some of the things that go on and why you're involved in what you're involved in.
Well, my designation that I have so far is CLTC, which is Certified in Long-Term Care. So we look at, that's a very important thing. That's a large focus of my practice. When we are looking at charitable giving, we want to make sure that those assets are available if somebody has designated funds. So we look at long-term care planning, and we are investment advisory representatives, which means we both carry securities licenses. So, and these are important and required in the work that we do.
Yep. In addition to that, I hold a CFS, which is a Certified Fund Specialist. I specialize in mutual funds, help people invest and do research on their holdings in their 401ks, 403bs, etc. And the AAMS is Accredited Asset Management Specialist, which then goes more towards charitable gifting, trying to help people manage their assets and provide a legacy with those assets later on.
Now, Carol, you're from the Broome County area, and you're from the Syracuse area,
That's
right?
correct.
Okay.
That's right.
How long?
Well, I was born and raised in this area, and I've been a member of the Endwell United Methodist Church for my entire life. And I've seen a lot of changes in the financial structure of the church, and that churches are really struggling right now. So the topic today is about charitable giving, but it's not only for churches, but it's also for any charitable organization. Right. We'll get into that later, but I've been here my whole life. Okay. Been with the firm for 13 years.
Okay. And Ken?
I'm from New Jersey. I graduated at Marquette University, moved to Syracuse in 1980. I've been a financial services representative for 20 years.
Okay. Okay, I guess we'll kind of get into the topic, and the first question, who would be personally impacted by charitable giving?
Yes, there are three players in charitable giving. It starts with the donor, and then the charity, and then the donor's heirs, the ones that may be impacted by a donor giving his or her assets away. They have to be considering, are there other issues that have to be directed and tended to in the here and now? For example, have you made sure that you have enough money for you to live on for as long as you live? You don't want to overgive too soon. You want to consider, as I mentioned a few minutes ago, have you protected your own assets from long-term care spend down? You may have a child or another family member that has special needs that you want to be providing for. So basically, we want you to look at the here and now first before you consider charitable giving. I said I was United Methodist. The founder of the United Methodist Church, or the United Methodist Church, is John Wesley. And when he started his ministry, he was living on and earning about 30 pounds a year. Now this is the 1700s, but 30 pounds a year. And by the end of his ministry, he was earning 1,000 pounds a year, but still living on those 30 pounds, and he gave the rest away. So when you're looking at charitable giving for religious organizations, tithing and stewardship are key concepts in our giving.
Okay, who can receive the charitable gifts?
It's a good question. Usually it's schools, houses of worship, hospitals, humanitarian charities, private foundations, for example. For those organizations to receive the gift, they have to be recognized by the IRS as a charitable organization, sometimes called a 501c3 organization.
Okay. So why would someone want to give?
Well, there's a lot of reasons. First of all, people want to be remembered. They want to leave a legacy. Perhaps you've had a loved one that passed away, maybe of cancer or of heart disease, and you want that person to be remembered through your giving, maybe to, say, the American Cancer Society, the Heart Association. But again, when we're talking about religious organizations, maybe you've lost a loved one that was active in their church or synagogue, and every time you give a gift in that person's name, that person stays alive through that charitable donation that you gave. And plus, there's some pretty neat tax benefits involved in doing charitable giving.
What can be given as a gift?
It's another great question. Virtually anything can be given as a gift. Cash, mutual funds, CDs, stocks, bonds, art, jewelry, cars, interest in a business, life insurance, and annuities.
Okay. So if I am to give, what do I get in return?
Well, once you know the charity that you want to give to, and you've proven that you've made sure that it is authorized to receive charitable donations, you're going to be looking at some legacy and some tax breaks in the here and now. When we talk about gifting, we talk about a completed charitable gift, completed and unconditional. And what that means is, one, the unconditional part, the charity doesn't have to meet any standards, or they don't have to go through anything in order to receive that gift. And being a completed gift, and in order to get that tax deduction, you cannot retain any ownership of that gift. So it must be completely and unconditionally given. And there are some limitations on the amount of money that you can deduct off your taxes. The type of charity, the type of gift, and the amount of your adjusted gross income is key to the limitations that you can to take on your taxes. If the gift is made to a public charity as opposed to a private charity, public charity being the ones that we're discussing today, the deduction that you can take is a maximum of 50%. 50% of your adjusted gross income you can take a deduction for. And that would really only come into play if you were giving away, like John Wesley, a large percentage of your income. But again, you're going to want to talk to your tax professional so he or she can tell you what your limitations are for taxable giving.
Okay. How do I leave tangible property like art and jewelry?
Well, that can be a really fun way to leave a legacy. So let's say you have a piece of art, or you were left a piece of jewelry, and you really don't like it, but you know that well, that happens, right? Ew. But suppose you don't like it, you know it's valuable, you know that it has value, you can actually gift that tangible asset to your charitable organization. And how it works is like this. You have to have the property assessed by a licensed reputable appraiser. And then there is some paperwork involved. You have to transfer the ownership or the title to the charitable organization. And we'll just say church for our purposes today. And so you do the paperwork, you donate the gift to the church, and then you can take a deduction off your taxes for the value of that gift, again, up to your adjusted gross income. But there can be some problems. You can have something that's hard to sell. And it could be land. It could be an old residence. You can gift anything that's tangible to your church. And what could happen is they may not really want to care for it or store it or manage it until it can be sold. But if they do sell it, then they get that cash. They don't pay any tax on it, and they can use that money in ministry.
Okay. Now, who can take the taxable deductions?
Well, that's pretty cut and dried. The only people that can take taxable deductions is if you're doing the 1040 and you're taking deductions on your income tax. If you are just taking the standard deduction, you're not going to be able to take deductions because you're not deducting.
Okay. Now, should I give charitable assets?
Well, taxable assets, yeah, it's a wonderful way to avoid taxes. So we're going to talk about long-term capital gains taxes this morning. So let's say I buy $4,000 worth of stock, okay, and I bought it several years ago, and now the assessed value on the stock is it's $12,000. $4,000 is my cost basis, is what I paid, and $8,000 reflects the growth or the appreciation of the stock. If I were to sell the stock, I would have to declare the profit and pay capital gains tax on that $8,000. Okay? And assuming I've held that stock for more than 1 year, I'm going to be taxed on long-term capital gains. Okay? If I have owned the stock for less than 1 year, which would be kind of impossible, I think, to have an asset grow from $4,000 to $12,000 in 1 year, but anything that I've held less than 1 year, upon selling that stock, I'm going to pay ordinary income tax on that stock. If, on the other hand, I gift my stock to the church at the value of $12,000, and again it fits into my adjusted gross income limits, then the church can sell the stock, they can hold the stock, but when they sell it, they don't pay any capital gains on that money, and again they use the full amount, that's $12,000 for ministry. The same thing applies to, say, mutual funds. So let's say I have a mutual fund that I bought for $50,000. Okay. Now it's worth $75,000. Okay? So again, if I sell that mutual fund or redeem it, and I have a $25,000 profit, right, I'm going to either pay ordinary income tax on the dividends, which we're doing anyway while we own the mutual fund, but we're also going to pay capital gains on the appreciated value of that $25,000. So the same holds true with mutual funds as with stock, that if you redeem them, you're going to pay either capital gains or ordinary income tax, and the church does not have to.
Okay, now suppose a person has a lot of money in an IRA. What can that person do?
Okay, I can't overstress the importance of taking care of the here and now, and you want to be careful about overgiving. So let's say you know you're never going to spend your IRA. You've got it all covered, you have maybe a pension, your Social Security, you're living within those means, and you have this IRA that you're never going to use. You've protected it against long-term care, perhaps you've purchased long-term care insurance, but you know that the principal and the income off that is protected from excessive spend down in any way. So now you've named the beneficiary as the church on the IRA, and the same thing happens. It passes to the church without income tax. Okay. You just name them as your beneficiary. Now, there is a law, the required minimum distribution law, that says once you reach 70 and a half, you must start taking distributions out of that IRA if you haven't begun already. Well, a lot of people use that to pay their taxes, to put a new roof on their house, do upkeep and maintenance in their everyday life. But for those folks who don't need that money, they kind of resent it. It results in extra income, may raise their tax bracket. So if they so they take that required minimum distribution and they direct it directly to the church, then no one pays income tax on that distribution. Now, the donor cannot take a deduction, but they also haven't declared that on their income taxes. Okay. So let's say I'm 75 years old, I have $400,000 in an IRA, and I have to take out $10,000. If I'm in the 25% tax bracket, I'm only going to get $7,500. But if I direct that money to the church, they're going to get the full $10,000, and I'm making the numbers up.
Right.
Okay, if you get to 70 and a half, and you don't want that money, and you don't take that money, the federal government will penalize you 50%, which is an excise tax.
I'm going to go off script for a second.
Sure.
But in the process, the money comes out. You can't put it into a checking. You have to give them directly the money. It can't go into one of your accounts first?
That's correct. You cannot take any ownership of that money, because that's a taxable event.
Yeah, okay, because I think that's important that people know that you get the cash, you just hand it over to the church immediately. You don't put it into a savings account or a checking account and write a check.
Right.
Okay.
It's not payable to Dave Alexander.
Right, but once you do that, then it becomes taxable to you,
That's
even
correct.
though you're donating it.
That's right.
Correct.
Okay. Okay. How do annuities work with charitable giving?
Well, annuities are used for IRAs mostly. And within IRA, the money within the annuity is not taxed, or the growth is not taxed. Money outside, if you buy a non-qualified or a qualified annuity, if you use cash, CDs, mutual funds to buy an annuity, it's going to still grow tax deferred. So you're not paying dividends or interest tax on that money that's in the annuity. The annuity then can transfer to your charity, and you put a beneficiary on your annuity. So then after things pass or you pass, the annuity would transfer to the charity that you want it to based on the beneficiary.
Okay. Well, I guess I'm going to ask this question. So if I'm dead, why would I care about this?
Fair. That's a fair question. Well, if you're charitably minded, you're going to be motivated to maximize the gift that you give to your church.
Okay.
So you want to create a tax-free transfer so that they're going to get 100% of your gift rather than 60 or 80%, depending on your tax bracket. And it's going to be based on the tax rates at your death. So you could be leaving a significant gift depending on the taxes you can save the charity.
Now, what about using life insurance?
Life insurance is actually one of the easiest ways to leave a legacy. It provides the donor the chance to actually leverage his gift. And by that I mean that the premiums that are paid into the life insurance can result in a much larger gift than the sum total of the premiums paid in. Because the charity is the beneficiary, it will pass directly to the church again. And life insurance benefits are tax-free anyway. But the neat thing about it is life insurance can provide you with a current tax deduction. And this is how that works. You name the charity as the owner of the life insurance and the beneficiary. So what happens is, let's say I'm 60 years old and I buy a $200,000 life insurance policy. I name the church as the owner, the church as the beneficiary. And let's say the annual premium, and again I'm making the numbers up, so let's say the premium is $5,000 a year. And I pay that premium to the church every year for 20 years. So over the course of my life, I've paid in $100,000, but I've left a gift of $200,000. Additionally, I can take that's a charitable donation, that premium, because I'm paying it directly to the church. Then I can take the tax deduction for the annual premium paid in. But there are two major caveats with purchasing life insurance for legacy. The first is, actually there's three things. The first is you have to be insurable. Okay, you have to have an insurance company that's willing to take you on as an insurance risk. The second thing is even though it's a great way to leave money, we don't know when we're going to die. Right. So we don't know when that gift is actually going to come to the church. Okay, and the third thing that charitable that donors are going to want to take into consideration is, so I'd say I'm attending this church and I'm paying my annual donation to the church. Again, we're talking about taking care of the here and now. So so I have $5,000 to give to my church. If I'm giving that to pay salaries and keep the lights on and keep the church warm, and I move it to buy life insurance, then I've really let this side of the here and now down. Okay. So this kind of giving is going to be more for folks that really have excess income beyond their tithe.
Okay. Are there other ways to leave a legacy?
Yeah, there are a lot of ways to leave a legacy, and proper legacy planning is an important part of an overall plan. So if we looked at charitable gift annuities, charitable remainder trust, and charitable lead trust, those are a few. With a charitable remainder trust, you or your family members are getting income from that trust. You designate a beneficiary when we're both not here or you're both not there. The charity then would receive that on your passing as well as a beneficiary, and then they could receive the assets from that trust. Now, they're considered to be advanced and charitable gifting techniques, so you may want to make sure you talk with an attorney or advisor to make sure everything's done properly.
Okay. Now, before we kind of get into some of the other pointers, I know there's a little thing we need to read about you being here today, so maybe I'll let you do that before we get into some other...
Sure.
This is called the Circular 230 Notice, and pursuant to IRS Circular 230, MetLife is providing you with the following notification. The information contained in this presentation is not intended to and cannot be used by anyone to avoid IRS penalties. This presentation supports the promotion and marketing of insurance and other financial products and services. Clients should seek advice based on their particular circumstances from an independent tax advisor, since any discussion of taxes is for general information purposes only and does not purport to be complete or cover every situation. In addition, any discussion of taxes herein or related to this presentation is for the general information purposes only and does not purport to be complete to cover every tax situation. Tax law is subject to interpretation and change. Tax results and the appropriateness of any product or any specific taxpayer may vary depending upon the facts and circumstances. You should consult with and rely on your own independent legal and tax advisors regarding your particular set of facts and circumstances.
Okay, so I guess one of the main things out of that is everybody really should talk to a tax advisor or whoever does your taxes and get the information, or talk to an attorney to make sure what your heart calls you to do, that you do it the right way. So I can just see people doing things and it doesn't really benefit the right way, so it's very important that you follow through and get some legal advice or talk to a person who's very familiar with that. So now, are there other pointers that you'd like to throw out to us on this?
Well, when we do this kind of work with our clients, we work with a team. We want to have an attorney involved. We want to have the tax preparer, the accountant involved. And we want to really spend a lot of time with that client. We want them to make sure that they really have looked at everything. One of the things that folks tend to overlook when they're doing planning, and they're so eager to give, and it's a wonderful thing. But one of the things that we really need to make sure, and we haven't covered so far in our time this morning, is that inflation. So if you're going to make an ongoing gift, your purchasing power over time is going to decrease. Okay, so it's going to cost more to buy the same goods and services. So that's another really big thing that people need to take into consideration. And really, again, look at all of the different avenues for giving charitably. Another thing about life insurance is a very simple way that folks give life insurance away, and that's simply, you may have an old policy that you bought way back when and you don't need it anymore. It isn't really relevant. You just need to change the beneficiary, and a lot of folks have these really old policies that have long since, they're not paying for them. It's just sitting there as part of their asset base. They just go in, call the insurance company, have them do a change of beneficiary. You pass, they get the money. It's a it's a matter of a couple signatures. But really look at all the different ways that you can give. Consult the people who may be impacted either positively or negatively, and make sure that you've taken care of the here and now.
Okay. Now, just, I'm going to throw out kind of an example now. I have a policy that I got 40 years ago, and it's, say I die and it's there now. Right now the beneficiaries are my children, but they could actually take that money and just give it to the church. Would they get a benefit from taxes by doing that, or not necessarily?
No, because it's not earned income.
Okay.
So they can do that,
Yeah.
and they can use it as, well, they actually can use it as a deduction as part of their charitable giving.
Okay.
Okay, but they're not going to get the kind of, well, life insurance passes tax-free anyway.
Okay.
And you can also add the church. So instead of having 2 beneficiaries, I know you have 2 children, so instead of having 2 beneficiaries, you may do like 40%, 40%, 20%, and leave the church as that 20% benefit. So you can divide your beneficiaries as well.
Okay. Now, I guess one other little thing, and I know because we both go to the same church, that you write a little article every month. Now that's about giving, and I think that's something that a lot of churches could do. You throw a little tidbit out there that, to give people consideration for doing. And I think that's a great way to inform people that there are other ways besides just giving your, either weekly or monthly contribution to the church. So.
Yeah. Well, it's actually just a line or two, and it's actually, I just sort of advise the finance committee, hey, you could tell folks to tithe on their income tax return, and the next thing I know, it's in the bulletin, so it's just, but sure, this should be in people's faces, in their consciousness all the time.
Great. Yeah. I want to thank both Carol and Ken for coming today.
Thanks for having us.
I think
yes, thank you.
Been a great chance to learn a lot about giving to not only churches but to organizations like the Red Cross or Cancer Society, and I hope that it has given some people a lot of insight into this. And again, thank you so much for taking the time out of your schedules to be here today.
You're so welcome. Thank you.
Thank you again.